Hey, hey, hey. This is the Digital World Podcast, guys, and today is another 2 day video or a 2 video day. I'm over here mixing up my English. So, this is an update to the Venmo, PayPal, and Cash App. So, it's officially being implemented, okay? And you should be aware of this. Now, when I last updated you on this, there were some things we had questions about, right? And so I think this should provide more clarity as to how this is going to be used. Now, I'll say this. This just opens the door to having more power over every transaction. So I'm opposed to this in that sense, right? And but also, I understand people use it and try to tax evade, which, I mean, listen, if you're doing that from the IRS, I would highly discourage from that because it's a tough cookie. Nevertheless, this is what it all means, right? So the new reporting requirement will ensure that small businesses that receive payments through those apps are paying for their fair share in taxes on them. And this is beginning as of January 1st of this year, right? So 5 days already into it. Changes will be included during the 22 tax season. The payment apps were previously required to send users 1099K forms if their gross income exceeded 20K or had more than 200 transactions per year. And so that's what it is. Now, we know with this new infrastructure bill that Biden's trying to pass, who's going to pay for that, right? The only way to do that is through more taxation and robbing the middle class of their wealth through taxation, okay? And inflation, which is the hidden tax. Nevertheless, I can see why they're doing this, but at the same time, it's opening the gateway because everyone uses this. Everyone is like, hey, you know what? I'm just going to pay you Venmo or whatever. What if they do that so often, right? Or what if they need to do it for who knows what? So the economic burden it's going to get bigger. But here's the caveat. Here's where it makes sense, right? And it's understandable why they're doing it. But again, I reiterate that you let the IRS sneak their way in just a little bit, and you give them an inch, they take a whole 9 yards. So that's why it's like once they start encroaching, they don't relinquish that. And that's why I'm opposed to this, because I know what that's going to mean down the line, and I'm not for it. Okay, so here, the new rule is only for goods and services transactions, not personal, such as paying a roommate for rent or reimbursing a friend. It also excludes anyone selling a personal item at a loss, such as a couch bought for $700 and you sold it for $650. Cash App will now be required to send the 1099K form to businesses with electronic transactions greater than $600. The new change will apply for the 2022 tax season. For the 2022 tax year, you should consider the amount shown on your 1099K when calculating gross receipts for your income tax return. PayPal warned on its website. The IRS were able to cross-reference both our report and yours. The new tax rule is separated from a proposed IRS reporting requirement that originally would have handed over transaction data on accounts with more than $600 aggregate inflow and outflow. That proposal, originally part of President Biden's Build Back Better plan, was raised to $10,000 threshold after much pushback and has not yet been acted on by Congress. So this is the kind of stuff, folks. They act in one way, they get pushback, they act in another way. So all this is still connected to that original proposal. And this is all part of the Build Back Better and that infrastructure bill, which is complete garbage. If people, how is he gonna say that they're gonna generate all this money and it's not gonna cost anyone a single penny? Like, who thinks like that? I guess anyone who believes him that you can just go ahead and come up with trillions of dollars magically for this bill proposal and that no one's going to pay for it, there's no free lunch. And this is what it upsets me, is that they blatantly lie to people's faces. And people believe this stuff. People believe this stuff. It's absurd. And I am, like I said, I'm in opposition of this. Because little by little, they start encroaching and they won't relinquish that. And soon, it's not going to be just people who have small businesses, right? Because here, it excludes if you're, paying a friend for rent or if you're selling something at a loss. Soon, it's going to be that too. Just give it some time and just wait and see. And this is the ridiculousness that we're dealing with here, folks. And sooner or later, when and if that bill is passed, I think they're going to pass it. Just wait, just give it time, because people are going to start begging for it when they're in need and desperation, because they want people to clamor for it. These tyrannical, draconian bills that are being passed, you're literally indebting yourself, taking away from the future, which your future generations are going to pay for. And so that's the sad reality of it. Obviously, I want to keep you guys informed so you know. I know my last video got a lot of feedback, got spread out a lot. So I hope this follow-up does the same, so people know that this has gone into effect. So let me know your thoughts, your comments below. What do you guys think about this? Are you happy that this is now the case? Do you think the IRS is going to keep on encroaching on your financial transactions? Let me know in the comment section below. This is the Digital World Podcast, and I'll see you in the next episode.